Hello, Broker Nation. I'm Todd with JKS Mortgage, for those of you I've not met before. And I want to talk today about building relationships with realtors, working a niche and being the best at what you're best at, instead of trying to be everything to all people. So a little bit of background about myself. I've been in the business now over 25 years, and I started actually in the retail kind of mortgage banker type of situation. At the time, didn't have a clue the difference of what a mortgage banker, mortgage broker was. And I don't think very many people back in the days did either. But the whole first part of my career was built doing subprime refis only. Very few conventional, very few purchases. And as what happened was as time went on, and I was really good at that, and I was doing very well at that. And then 2008 hit, and those of you who've been around for a while know that in 2008, the subprime market dried up instantly. And I had to pivot. I was faced with no business. I had just moved to Arizona and really knew nobody in the state. But, I kind of came to Arizona with the swagger that, hey, I'm killing it everywhere else. I can do it here. And subprime business is easy anywhere you go. And Arizona was a great market at the time. So, I came out here with that idea that I was just going to walk into the market and just start throwing subprime loans up everywhere. Well, that wasn't the case. Within months, the market dried up and I had to pivot. And that's what I want to talk to you about today, because we're not in a financial crisis impending in front of us right now. But for guys that depend upon refinances, you are about to have a pivot. We've seen rates go up recently, and they're going to continue to go up. We'll probably pull back down some, and there'll be little opportunities here and there for quick refis. But overall, the market is heading higher on rates, and we're going to see a lot of those refinances dry up. So just as I had to pivot in 2008 and 9, a lot of you guys are going to have to pivot away from focusing on refis, and you're going to have to find other business, and that business is purchases. And the best way to get purchase business, at least in my opinion, is to develop a real estate relationship with various agents and build on those relationships. So that's kind of what I want to talk about today. And as part of this masterclass, just go over my flow and how I do things and how I've developed those relationships. So as I said, in 2008, I was faced with this dilemma, and I had to figure out where I was going to get those leads. So, back in those days, it was a little different. I mean, it was only 13 years ago, but, the market's changed a lot. And, back then realtors were still in their offices. So I did a little different back then. I was going out knocking on doors, walking in with donuts, coffee, things like that. Which isn't really feasible nowadays, especially with COVID. But one of the ways I learned to get real estate business back then was by utilizing the title companies. I had befriended a couple title agents in town in the short time I was here. And I started utilizing those people to meet agents. And you guys can do that today. So that's kind of how I started down that path of building relationships with realtors. Now, those relationships have paid off very well over time. I no longer cold call leads. I no longer buy leads. I don't really out-call anybody unless a realtor's handing me a name and a number to call. That led to, some very good years in the last 6 years. 2020 being my best year ever. I think it was probably the best year for everybody watching this, unless you just got into the business. And as an example, it culminated in June of 2020. June of 2020, I closed 47 loans as a single loan officer working from home, processing all my own products, processing all my leads, deals. No assistant, no processor, no lead gen. Everything was purely organic through realtors. And then, of course, a number of those 47 were refinances. But those are refinances that came from previous customers that I received through realtors. So my June of 2020 of 47 units to me was an incredible month. I was surprised myself that I could even pull that many off by myself. And I don't know if I want to do it again necessarily by myself, because that was a lot of work, but it was rewarding. And damn it, if only 3 more, I could have said I did 50, but whatever, I'll take it. So the way I got to that was, again, years and years of building those real estate partnerships and working my old customers, staying in front of them. We talk a lot about brawl and wholesale lenders and things of that nature. As busy as I am, I still stay in front of my old customers as much as possible. And things of that nature, just, sending out those happy birthdays or sending out those loan anniversaries, just occasionally remembering something about a customer and just dropping a quick line and email. Not even calling. I rarely call customers, but I try my best to email at least 10 or 20 customers a week from the past, just to stay in front of them. And that, coupled with my realtor partnerships, was what made June of 2020 possible for me. And it's what's made it possible for me to average about 30 loans every single month. And that's not, 2020 numbers. 2019 was a great year for me. 2019 was my best year ever until 2020. And 2018 was my best year ever until 2019. And that's the beauty of building relationships with realtors, is as you build those relationships and then you bring on another one and another one, every year should be your next best year. I fully expect 2021 should be just as good or better than 2020 for me, even though rates are going up. My realtors are still busy. People are moving to Arizona in droves, and our market is smoking hot right now. And I don't really need those refis to stay busy. So if you stay in front of your customers, build those realtor relationships, that's how you're going to succeed in this business long term. Short term, anybody can go out there and throw up a bunch of refinances and have great months or great years. But when those refis dry up, that is what really separates the loan originator from the loan officer. And there is a difference, a big difference. A loan officer is a guy that sits at his desk and takes phone calls and closes loans. A loan originator is a guy or gal that goes out and originates. He goes out and develops relationships. He's not just calling leads. He's working every angle, whether it be realtors, title companies, divorce attorneys, financial planners, the dentist that you see. Everybody that you come in contact should know what you do for a living. We're in a type of job where you need to make that clear to everybody. It doesn't matter who. The guy down the street at Jersey Mike's, the sub sandwich shop, the manager and part owner there, he knows what I do. I've made it clear to him what I do, and he keeps a little stack of my cards at the front counter there because, I've developed a relationship with the guy. Don't know him from Adam other than just he's the sandwich guy, but we've talked enough over the last year and a half of me going in there once every week or two that he feels comfortable to promote me. So that's the things that you guys need to do. Everybody you come into contact with, your UPS delivery guy, I don't care who it is, the landscaper that's cutting your neighbor's yard, not even yours, give him a card, tell him what you do. You never know who's going to be that next referral source, and you can't go wrong with it. It's never going to hurt you to give your cards out to people. So that is what built up to my 47 unit month in June of 2020. That's what built up to my, 345 loans for the month of June, or for the year of 2020. That, I closed $111 million in 2020. Again, working from home, no processor, no loan assistance, nobody, just me and my computer and, my lenders and such. So relationships are everything to get to those numbers. So the best practices I can give you for how I did that was time blocking. You're not going to be able to just throw up numbers. You have to be able to do it and still service everybody and give the best service possible. Because even if you don't give good service, those big months will dwindle away because you'll lose those referral partners. So one of the things that I'm really big on is time blocking, as I mentioned just a second ago. And what I mean by that, I consider myself to have 2 full-time jobs. By day, I'm a loan originator. And then after hours in the evening, I'm a loan processor. Now, not everybody needs to be a night owl like myself. Some of you guys are like Anthony Casa, for example. Anthony's up at like 2:30 in the morning. He's a super early riser. I'm a super late dweller. But block your time out. During the day, like from 8 a.m. to 5 p.m., you need to have that originator's hat on. You need to be calling your leads, you need to call your realtors, talking to your customers, working with your underwriters, because that's the only time you can do that. But if you're an early bird, do it in the morning before hours. If you're a night owl like me, do it after hours. But at night, I go back into my home office in my house and I sit down and I start knocking out all the processing things that I don't need to do during the day. Emailing off title orders, emailing to insurance companies to get deck pages updated, packaging up loans and getting them submitted to underwriting, going through conditions and emailing the customers late at night to say, hey, Mr. Customer, we need this, this, and this to close your loan. All that busy work that takes away from the afternoon when the phones are ringing, I push off to the evening hours. And again, if you're an early riser, do that from like 6 a.m. to 8 a.m. Do it before the phones start ringing. But find a way to block out those time periods, because that's crucial. I hear a lot of comments from loan officers that, reach out to me personally and will say, I'm really getting busy, Todd. And how do you manage that many loans by yourself? Because I'm just lost. I have too much going on. I'm lost. And I asked them, I said, well, how do you block out your time? And they say, well, I don't. And I said, well, you have to. And well, they said, but if I'm working on processing a file and then the phone rings, I have to take it. And I said, well, that's why you need to block your time out, and you need to block out specific hours when you're not expected to be available by phone. Again, for me, late at night, to do those busy work. And a lot of you guys have processors, so you don't even need that. And even if you do have a processor, you can still time block. Time blocking as an originator. Find a certain period of time where that your phones aren't as busy, or you're not getting as many real estate calls, you're not getting as many calls from your processors or underwriters. Use that time to make your outgoing calls and to do your origination. And then use the rest of your day to be more that loan officer where you're chasing conditions and you're uploading conditions and things like that. So even with processors, you still need to time block out your origination hours. If you don't do that and you don't have a plan, it's hard to be consistently successful. You can have some really good months, but I find when I talk to other loan officers, especially newer ones that are asking for help or mentorship or whatever, and they'll say, well, I just came off of a 20 unit month, but now I'm only looking at 3 units. And then the month after that, they'll do 15, and then they'll go back to 3 or 4. And that inconsistency is because they didn't take the time or schedule the time to originate in that busy month. That busy month, they were so focused on just getting through that month and closing those 20 loans or 15 or 30 or whatever you call busy. During that period of time, they didn't take the time to originate new business. And that's why the next month they're crashing. So it's almost like a diabetic that's going on sugar highs. They're up, and then they crash. And originating is very similar to that if you don't take the time to block out for new business. And otherwise, it's going to be a very up and down business model. Now, overall, you could probably make really good money in that model. But I know everybody wants to be consistent, because consistency is the name of the game in this business. So use that time block. Be very conscious of that. It's very important. Going into that part of originating, again, let's go back to the real estate relationships, because that's everything in this business, in my opinion. Find ways to meet realtors. And the ways you meet realtors are infinite. There's an unbelievable amount of different ways you can meet realtors. Of course, there's the old adage, you walk into their office, you deliver coffee or donuts or cupcakes or whatever it is you're doing. Okay. Those days are kind of over. For one, realtors are very seldom in the same place together at their office. I mean, if you go into Keller Williams, they might have a meeting every week, but they're not going to want anybody in their meeting. And chances are they're not even doing that. So those days are kind of over. And then COVID has obviously killed that also. So you can't just walk into an office like I did 12, 13 years ago to meet realtors. So now you got to find ways to meet them. How do you meet them? First and foremost, one of my best ways to meet realtors, and actually 2 of my top 5 realtors came from the listing side. Okay. They were the listing agent on a sale. I was the loan officer. The one I can think of off the top of my head, it was a one of my agents brought me a customer and we were doing the transaction. And during the process, I made a point, and I do this on every process. If I don't know that listing agent, or even if I know them, I make sure that I dazzle them. And what I mean by that is from day one, I'm consistently in contact with that listing agent. I want them at the end of the transaction to say, man, that guy just never quit calling and keep me in the loop of things. You guys will probably admit that you're guilty of this, because I used to be guilty of this. And I know if you're not guilty of it, you know somebody that is guilty of this. Ignoring the listing agent. We often, in this industry, we often view the listing agent as almost like the enemy, or the other team. And, we got to quit thinking of them as the other team. I mean, granted, they kind of are, because they're representing the seller who's not our customer. But we got to look at them as being part of our team, and we have to keep them in the loop. Because I hear from listing agents all the time that after I've worked with them and I've started building a relationship after the fact, one of the things I hear is like, well, you're the only guy that really always kept us in the loop about what was going on. We never had to pick up the phone to call you to say, hey, what's going on? Like, you were a day or two ahead of us every step of the way. And that's what you need to do. It's not hard to do that. And always never let them call you first. Always think ahead and reach out and keep them in the loop. Hey, Mr. Listing Agent, just ordered the appraisal. Is the number that I'm calling you at right now, is that the best number for the appraiser to reach you? Oh, it is. Okay, great. Oh, it isn't. Okay, well, let me go back and edit that order. But it is ordered, and be ready to hear from somebody in the next 24 hours to schedule. A simple call like that. As soon as it goes under contract and I got all the opening escrow documents from title, I immediately reach out to the listing agent. I right away say, hey, I just got a couple minutes of your time. I want to walk you through my flow. And I explained to them, right now the contract or the customer is getting the inspection set up. While they're getting the house inspected, I'm gathering all the docs. I just kind of walk them through the flow of how I do business. The way I do it might be different than you. But the point is I keep them in the loop on how things are going to go and what to expect. Then again, with the appraisal, constant loan updates. In Arizona, we have a form called the LSU form, which is a loan status update. It's part of the actual contract itself that these be sent out on a regular basis to the listing and the buyer side. So in Arizona, we're contractually obligated to send these out, but I don't care about that. I send them out, but I always follow up with a phone call. Just emailing that sheet doesn't do much. So if you dazzle that listing agent with communication, everything goes smoothly because everybody's communicating properly. Not that there's not a hiccup occasionally, but at least when there is a hiccup, they know about it and they're not wondering what's going on. So at the end of the transaction, after it's funded and recorded, I usually wait one day and then I call the listing agent and I just send them a quick thank you. Hey, Mr. Jones, I just want to thank you. You and your sellers help keep this transaction going smoothly. We all work together as a team. And I just want to say thanks for, you having your sellers on top of things to make my job representing the buyers easier. And by the way, I hope I exceeded your expectations of what you see in a loan officer. And if you ever need anything, I would love to work with you again. So maybe keep me in mind. I know you have your other loan officers, but just keep me in mind. I don't hard sell them at all. I just drop that in there like that. And then about a week and a half to 2 or 3 weeks later, sometimes 3 weeks, I always wait a little bit of time. I usually send them out an email. And I just say, hey, once again, I want to thank you. By the way, these are the things that I really focus on and I'm really good at. So keep me in mind if you ever need anything. I would be happy to. By the way, if you need a pre-qual at 10 o'clock on a Saturday night and your regular guy isn't available, give me a call. I'll get that pre-qual done for you. I'm pretty available. And, I don't mind calls on nights and weekends. And I've actually picked up listing agents because they could not get a hold of their regular guy on a Sunday afternoon or Saturday night. And they said, oh, well, okay. And I did the pre-qual. Of course, as long as they're ethical, they would keep the pre-qual with me, which most of them are usually good about that. And now I got my foot in the door. So that's how I went through and developed some of these listing agents into my buyer's agents. The other way, and you guys have heard me talk about this on various platforms, is title companies. I mean, Reach out to your title companies, befriend them, do all the UClose stuff with UWM for them because they hate working in that system. And if you do it for them, you're going to make a friend really quick with the title agents. So those title agents are the first ones to hear often when things aren't going well on the realtor side with their loan officers. They'll be, why are these loan docs not available? I don't know. And I'm tired of this damn loan officer not communicating with me. And why don't we have loan docs? So the title agents hear that. And I have title agents that really like working with me, and they will literally tell that realtor, if you're interested, I have a guy that's great. You might want to talk to him. And I've actually picked up realtors that refer me a lot of business. A lot of them have come through title companies. A lot of you guys know I work with Redfin, and they're one of my big referral partners. I met Redfin through a title company because the manager at Redfin had a personal deal of hers going a little rocky. And I won't say the title company's name, but the girl at the title company, Kim, she was a fan of mine. And I'm a fan of hers. And she told the manager at the time at Redfin, she said, have you ever thought about working with Todd at JKS? And Lori, the manager at the time at Redfin, said, I don't know who that is. And Kim said, well, here's his card. She keeps my cards on her desk. She said, you should give him a call. I think you guys would fit well. And 4.5 years later, and I'm averaging over 100 loans a year with Redfin, all because of that one title relationship. I mean, just that one title relationship introduced me to Redfin has put over $1 million in my pocket. Well over that over the last 4 years. So you never know where that big relationship is going to come out of. And you got to work every angle. And again, title agents are gold mine for this. So keep that in mind. The other thing, I mentioned briefly is niche. I'm a firm believer in finding what you're good at and sticking to it. I don't believe that we can be all things to all people. Now, that differs with a lot of brokers and their philosophy. A lot of guys say, well, I became a broker because I wanted to have all these products so I could do everything. And that's fine. It's just my personal philosophy. I believe in finding your niche. I'm a huge Steve Jobs fan when he was alive in Apple. And, if you remember back in the Jobs days of Apple, they only had a couple products because he was a big believer in be the best at a couple things instead of just being good at a lot of things. So my niche is clean conventional business that I was forced into by the downturn in the market in 2008. Wasn't my idea back then to be a clean conventional guy. It just was the only thing I had available. And I got into that niche and like, man, this is the best of everything. Easy, clean deals. But I've focused on that and I've talked to realtors and title people and everybody. They know, hey, if I got an FHA deal or DPAs or any of that stuff, Todd's not my guy. But I know that Todd, when I get that clean conventional customer, the customer that might go on the internet and end up with a better.com or an AIME or one of those online lenders that these realtors absolutely loathe and hate to work with because they're just terrible to service. They know that I'm going to be the guy that's going to keep that customer local and not on the internet because I'm going to have sharp pricing and I'm going to know my business and I'm going to work it. And so your niche may be VA. I applaud you guys that niche out on VA like Chris Griffith. I mean, that there's a guy that is battling every day for the better, so that might be your niche. And that's great. There's a ton of VA business out there. Your niche may be DPAs and FHA. If it is, God help you, but you're a better person than me if you can deal with that business for very long. But there's a niche for it and there's a need for it. So if you're the person that's great at it, you're going to get a lot of business because a lot of guys like me are going to refer you business like that because I just don't want to do that stuff. And I'm not good at it. It's not my thing. So I really think that if you find your niche and really stick to it and make it known, make that your branding, brand yourself. I have a brand in the greater Phoenix market and realtors know that. And they know that I'm that guy to go to for that clean conventional loan or jumbo. And I stick to it and I don't waver. I don't say, oh my gosh, I'm going to try to get me. Here's a guy wanting to buy a $500,000 home. I can make a decent commission on it, but it's got all kinds of problems. I'm going to make that my project this month. Well, guess what? If I ever do get it across the finish line, I probably lost 4 or 5 deals in the process because I wasted so much time with that project. So I'm a big believer, find your niche. If it doesn't fit in your niche, find somebody to partner with. I have various loan officers in the city that I give loans to occasionally that aren't my type of loan. You know, Lisa London, Matt Oliver will tell you, I've given that, they're my competition. I call them my friends too, but they're my competition. I give them loans from time to time because they're things that don't fit into my box. So have outlets for those things and find your niche, and it'll go a long way in the long term. Now you have to develop that niche. You just can't tomorrow call up your realtors and say, hey, I'm no longer doing anything but conventional business. You can't do that. You have to develop it over time. It's building a brand. Apple didn't build a brand with their first computer. Pepsi didn't build sugar water brand with the first drop of cola. I mean, it takes time. But as you work that and develop that and move towards that niche, it'll pay off handsomely over the long run. You just have to build to that. Now, all my successes I've had over the last number of years and everything else, you guys have seen me on Facebook. Sometimes see a couple of people like give me a hard time, say you better hire somebody, you gotta hire somebody. How can you do this all yourself? So it's funny, it was actually a year ago, February. So it's just been a little over a year ago. One of my realtors called me and said, hey, I got this guy that works over at a local mortgage banker. He was with AmeriSave or AmeriFirst or AmeriSave, one of them. And he's just not doing very well, and Adam was over there, and Adam was a new loan officer. He had been in the business for literally a few months, and he went to work at this company, and his wife was a realtor. And I think they recruited him right out of loan officer school because they saw the potential of him maybe bringing in real estate business because he was married to a realtor that was a busy realtor. And of course, don't think I didn't think that too when I hired him, but it helped. Let's put it that way. I'm not going to lie, but he was over there and he was struggling because he wasn't getting any help. I mean, they took him out of loan officer school. They basically threw him on a desk and they just weren't giving him any support. So he was closing 1 or 2 loans, sometimes 3 loans in a month over there. And a couple of my realtors knew him because they knew his wife and they worked with his wife. And so I interviewed him. And my thought process is that I was going to make this newbie a loan officer assistant. I was going to hire an LOA. I was finally going to break down and hire an LOA because, for years I've needed one and everybody's been on me about it. So after interviewing him, I thought, I just can't give up my control. I just don't feel comfortable having my loans worked on by somebody that I don't really know that well yet, but I'd like the guy and I could see a lot of potential in him. I mean, interview him, I could see here's a guy that really wants to succeed. He really wants to do well at this business, but he's just not getting any guidance. So I brought him on as a loan officer, and that's what he really wanted to be anyway. And so now we have Adam with us, and he's just past his 1-year anniversary. And just by allowing him to learn from me and guiding him, and then honestly, I've given him a lot of leads the last year. Because I'm so busy, I don't do a lot of refinancing. I prefer to stick to my purchase business. I tell people I hate dealing with refis. I really don't like refis. I mean, I like my real estate business more than anything. Refis are just icing on the cake. So for the last year, I've let Adam take a lot of my overflow of refis, and he takes them, he closes them in his name. I do not count his numbers in my business whatsoever. It's his business. I may have given him the lead, but it's his business. So I brought this guy on, and I've been so anti-growth, but I realized I had to. And just working hand in hand with him, supporting him and being there for him as a mentor. Here's a guy that was closing 2 or 3 loans a month at a retail shop, barely getting by. He worked for us for 10 months in 2020. The first 2 months of that tenure with us was right when all hell broke loose with the coronavirus. So realistically, he closed a couple loans in March and April, but it was a rough go. I felt so bad for the guy because I'm thinking, I bring this new guy on, I tell him I'm going to make him a bunch of money and I'm going to make him successful. And then the whole industry is facing a shutdown, it seemed like, in early March and all of April. So I was a little nervous for him. But we got through April, we got through March, the first 2 months. And by May, all cylinders are firing for him. And believe it or not, in 10 months, which was really 8 months because of the coronavirus, Adam closed 110 loans, I think, or 115 loans. I don't have it right in front of me, but yeah, he closed over 100 loans in 10, really 8 months, I'd call it. Let's call it 8.5, because the first 2 months really I don't count. And he just did it by doing what I told him. I mean, he listened to me. He was wide. He was like a blank sheet of paper, wide open for interpretation, and he took mine. And that was, Adam, you're going to be the conventional guy. Here's how we work realtors. Here's how we do this. Here's how we do this. And he listened. And to his credit, he did listen. He didn't fight back and say, I don't know why you're asking me to do this dumb shit. He went through it and did it my way. And his first real year in the business, he closed 110 loans in 10 months, but call it 8 months. I mean, that's a pretty real, that's better than guys in this business 30 years sometimes are doing right now. So, so he followed my way of doing it. So I'm not here to say my way only works for me. It works for him too, and as he's proof in the pudding. And you guys, some of you met him online. But it's crucial for us to constantly look at other ways to bring income and revenue in. And with me, it was Adam. Those loans that he did last year, a lot of them he produced himself, but a good chunk of them I helped him along by giving him old customers of mine. Those old customers of mine went somewhere else because I physically did not have the time to handle any more business than I had last year. So we brought Adam on, and that was a way we grew. So growth is good. As much as I am fearful of bringing new people on, I've realized it's crucial to our industry, because without growth, you're just running in place and things get stagnant real quick. And there's nothing like, no better way to kill your career than to get burnt out and to get stagnant and not have anything to look forward to. So with Adam, it gave me new excitement to watch this guy grow. And as well as I did last year, I could care less about my numbers last year compared to his. His numbers excite me because I'm looking at, honestly, here's a guy that was brand spanking new, basically, that did over 110 loans in 8.5 months. To me, that's the biggest win I had of all last year. It was Adam's win, but I look at it as my win too, because I felt like I was the guy that just coached the Super Bowl quarterback, So go out there, find your Adam. Go out there. For you guys that are really established and have a lot of business coming in, find your Adam. Find that guy that's maybe struggling a little bit in retail, and there's a lot of them out there right now, a lot. And those guys are especially, really, really, they're depressed and they're like in a rut. When you're at a retail shop and you're newer and you're closing and maybe making $4,000 or $5,000 a month, and you've got all over the internet, you see other guys in the industry making $100,000 a month or sometimes $200,000 a month. You're sitting there struggling to get by, and there's guys in the business making high 6, 7 figures in incomes. That's demoralizing because you don't know what you're doing wrong. So go out there, find that guy, find that Adam, and bring him into your shop and mentor him and bring him along and make another superstar broker out of him. I think I'm super stoked for Adam. I think that in a couple of years, Adam will probably be doing 200-300 loans a month or a year. Just like me. And, it's great. It's great watching a guy thrive that you kind of helped along. It makes it all worthwhile. So that's my motivation right now at this stage in my career. My numbers don't really do much for me. They're just numbers, but it makes me happy to see other people grow. And a lot of guys will say, well, man, you always take the time out to answer guys' questions. Like, yeah, because I love helping other people and I like to pay it forward. And any one of you out there watching this that's established, pay it forward, help somebody out. Take 5 minutes of your day, because I'm a big believer in karma. I think that karma will come back to you tenfold. Every time you help somebody, I think you're building karma brownie points, as you want to call it, and I'm a big believer in that. And I think that's why I think I've just had a blessed career, and I think that I owe it to everybody to pay it back to them. So go out there. If you're new, find a mentor that's going to help you along. If you're established and doing well, mentor somebody else, or just be willing to help other people. Take 5 minutes of your day to help others. It'll go a long way in this industry. I don't really have much else to talk about, but I do want to talk a little bit about partnerships. AIME has been the best thing that's happened to the broker model in my 26-year career. Early on, I was a NAM member. I was back when I was in Cincinnati. I was really active in the Ohio Association of Mortgage Brokers, which was like the subset of NAM. Um, Around 2008, I watched NAM turn their back when the whole world was like, imploding on brokers. I watched NAM. In my opinion, they turned their back on us. In my opinion, they became the National Association of Mortgage Bankers. I still think they should change their name because I think that mortgage brokers are like an afterthought to NAM. And I know Kimber talks about how he's a mortgage broker and he's the president, but I still see nothing that tells me that they have the brokers first mentality. So AIME, they got us. They got our backs. I can't say enough about AIME. I mean, it's brought a community together that was never there before. I now have some solid, great friendships that I would have never had if it wasn't for AIME. I've got a core group of friends in this industry that I really, truly think are friends. I don't look at them as like, oh, that's just another mortgage broker I see at conventions. I mean, there's a group of people in this industry that I literally talk to every single day. There's about 12, 15 people that I talk to every single day in this industry, and sometimes multiple times a day, sometimes at 1:30, 2 o'clock in the morning, because they know I'm a night owl and they happen to be up late, and we'll sit there and text back and forth. So I've built some strong bonds thanks to AIME, and those bonds are good. They help. We refer each other business. I can bounce things off of them when I don't know the answer to something, because I don't care how long you've been in this business, you don't know everything. I still don't know everything. So use AIME to network. Use that. Show up at the meetings, show up at the events. I know the coronavirus took some of them out last year, but be present at these events. You can't imagine what these networking relationships will do for you. Getting to know UWM and their leadership and Matt through AIME has been the best thing ever. I mean, I know how to get things pushed through UWM now because I've networked with those leadership people and I know them. I just, again, support AIME. If you know other brokers that aren't part of AIME, get them in AIME. They need to be here. They need to be with us. We can only get better with strength in numbers. We have to do this. We have to grow AIME. So it's all of our duties to go out there and make this a better association. Talk about partnerships. I know it was met with a lot of skepticism and some people hated it. But to me, Matt and UWM said, we're going to risk our bottom line to do what's right. And to do what is right is to say, don't use Quicken. They don't have our interest. They're against us. They're out there actively recruiting our realtors because they don't want us. They want the dollar, not us. UWM wants us as their partners, and the dollars will follow. Quicken is only looking at one thing, and that is how can they dominate the market space and how can they remove the independent mortgage broker from the equation while using us to get to that point. So if you're a loan officer that over the last few years has made fun of Zillow and realtors that spend money on Zillow and support Zillow, who is now trying to take the realtor out, I see it all the time. Guys online saying, why are realtors paying for their own executions? Well, guess what? If you're one of those guys talking about Zillow and realtors and you're sending business to Quicken, look up the word hypocrite in the dictionary because it's right there with your face on it. And that might sound a little harsh, but I'm sorry. I don't want other guys in our channel to promote things that are going to go against what I'm trying to do for a living. And that's what you're doing by feeding the beast. So applaud UWM. When you see Matt at an event, shake his hand and thank him for having our backs. And thank all the leadership at AIME for these people at AIME worked their butts off for us. So thank them. And when you see Anthony Casa, obviously thank him because this all started with him and a little idea. Me and him, I got to know him at the very beginning stages of BRA, and I honestly considered a guy like a brother. So everybody's worked hard for you as the independent broker. So use it, and let's kill this thing together, and let's make this a better broker world, and let's get to 50% market share in the next 5 years, and let's put Quicken and all the other wholesalers right where they belong, which is back into retail and out of wholesale. With that, guys, thanks for the time. I probably went a little long, but hey, if you guys need anything, I'm at events all the time. I don't always have time to take every single phone call or every text message, but I do my best to get to people when they need help. But hopefully this helped a little bit and you guys got a little tidbit out of this. But remember, real estate relationships, title companies, let everybody know what you do for a living out there constantly. And you know what? I went through this whole thing without giving you guys my catchphrase, and I mean this wholeheartedly. This is my absolute hands down motto. Answer your damn phone. Seriously. If you don't answer the phone, they're going to call the next guy, and that next guy will be me, and I'll answer that phone, and then you'll lose that customer. So answer your phone. You cannot, it's the simplest, most basic thing we do, and yet nobody wants to do it. Or not, I shouldn't say nobody, but you guys don't want to do it all the time. That 10 o'clock phone call on Saturday night, that could be $5,000, $6,000, $7,000 in your pocket. Answer your damn phone. All right, guys, have a great week. Hope to see you guys soon.